Hi, welcome back. We're here with Carissa Dorado from Premium Mortgage. Part of the sequence that we're using here is types of mortgages. Last one we did was FHA, a government program. We're going to do another government program today, the VA loan, which is Veterans Administration, right? That's all?
Yeah, you nailed it. This is for U.S. military veterans.
And now it's just a veteran. So let's say a wife of a veteran.
If the other person has deceased, so let me rephrase that. If the veteran has deceased and the spouse has not remarried, then the spouse actually can take out the VA loan on the deceased spouse's behalf. So that's very complicated, but ultimately the answer is it is very possible.
Okay, excellent.
Yeah.
Now,
sorry, go ahead.
No, go ahead.
I was going to say the only person we can put on a VA loan, because this does come up quite a bit, is the veteran, and the only other person is a spouse. So they do have to be legally married. We can't do a non-occupying co-borrower. We can't do, family member. It really is only the veteran and legally married spouse.
So that leads to the veteran or the spouse this has to be their primary residence, correct?
That is correct. Yep. All government-backed loans, it does have to be the primary residence.
Now, the question I have is, and I don't think a lot of people understand this, is
sure.
My father's a Korean War veteran, so he's 87 years old. Right?
Oh, yay.
If my father wanted to buy a home that he qualified for, at the age of 87, he could still get a 30-year VA loan.
Oh yeah, absolutely. If I didn't pre-qualify him for anything other than that, I would actually be doing age discrimination. He can choose to go with a 15 or a 20 or something different, but I have to offer a 30-year max term mortgage regardless of age.
Okay, well, it's good information to know.
All right, good question.
Let's get right into it.
Sure. So I actually have a loan comparison program sheet to show us to kind of walk us through some of the basics. I'm going to go ahead and do screen share. So it'll take just a second. So you might recognize the same exact one from before. This is our loan comparison sheet, and I'm just going to zoom out for a quick second so we can see everything here. But then I'm actually going to zoom in just a little bit so we can see the VA, and I have this here. One of the cool things about a VA loan is it's 0% down. Now, in order for me to get somebody pre-qualified for a VA loan, I either need a copy of the certificate of eligibility or a DD-214. If either one of those, if we don't have those ready to go, I actually can order the certificate of eligibility, but I usually have to ask just a couple basic questions. So I need like the full middle name, I need the branch of the service that the individual participated in, and whether or not they've used a VA loan before. And I can actually go out and get the certificate of eligibility. The certificate of eligibility doesn't necessarily always pop, and sometimes I do end up having to get the copy of the DD-214, but most of the time I can actually have it back in hand within 24 hours or less. And so I do need to have that in order to issue the VA pre-approval, to make sure that is a go. So that's the only thing I just wanted to start off with, is I do need that in order to have the pre-approval available. But the VA loans is really neat. We actually are veteran owned, so Premium Mortgage is veteran owned, and we waive our application fee as well too. So the fee for our mortgage is actually less across the board than any other mortgage program. So
all right, good to know.
Yeah, exactly. So with a VA, as I mentioned, it's a 0% down. You can go up to a 4-unit property at 0% down. As we mentioned earlier, it does have to be owner occupied. The neat part about a VA loan that not everybody is aware of is you can actually reuse your VA loan entitlement. So you can have more than one VA loan at a time in certain situations, and there's some very special situations that happen, but somebody can also keep reusing their VA loan. So if somebody currently has a VA loan, they want to go contingent on their next home, we can just reuse the VA loan as well too. There's some extra forms that need to be completed, but it's actually a very common practice. So just wanted to make mention of that. So with the VA loan, it does also allow for seller's concessions. Seller's concessions meaning that if you don't have the money available for the closing costs, you can try to wrap that into the loan. It does need to be also in the purchase price. So I'll use the example that I used underneath FHA. For that previous video, is it does allow for the 6% seller's concession. So if you were offering that to seller $100,000 and we can add on that 6% seller's concessions. The sales contract would be written up for 106. And then that $6,000 would be taken off from the closing costs. And you'll notice I'm not saying down payment because there is a 0% down with that too.
So someone could basically, if they bought a home for $100,000, they can mortgage and finance the $106,000.
Yeah, as long as it appraises, correct? And as long as
appraises
everybody's
at
on board.
106, right?
Yeah,
Just like
exactly.
any of the loans, and I want people to understand that when you take concessions,
Mm-hmm.
the home has to appraise for the purchase price, which is including that percentage, whatever it is, up to 6%.
Yeah. Yeah, you got it. So on the VA loans, a lot of times we actually don't need to go all the way up to the 6% seller's concessions, and which is cool. The interactive pre-approval system that I have, which I know we have talked about before, it actually allows you to run the mortgage numbers, so we can calculate the exact seller's concessions needed on a property. And the minimum credit score for the VA loan is the 620. Now there is a VA funding fee, and when we get the certificate of eligibility, it tells me what VA funding fee somebody would be charged. If somebody is 10% disabled or more in receiving the VA disability, the VA funding fee is waived. If they are going to be charged a VA funding fee, that actually gets, normally we wrap it into the loan and it's not a fee paid at closing. Some folks do choose to actually pay it at closing, but most of the time, 98% of the time, it actually is a fee that we just wrap right into the loan amount as well too. So
Okay.
just something to be aware of. The other thing that I wanted to mention too is the appraisal. So the appraisal is going to follow similar to like an FHA or a USDA appraisal, where they're going to be double checking to make sure that we have handrails for anything more than 3 steps. There is like a certain inch percentage too that I don't know off the top of my head as well. Like if it was like 18 or 24 inches up, specifically thinking of like a porch or something on the outside.
Yep.
And then also peeling paint on the outside of the house too. Those are like our 2 most common items, but honestly, they don't come up all that often.
No, and we see it sometimes just because in Western New York, some of our decks are, the paint is chipping, or they don't want to see bare wood. We see it in soffits. Sometimes someone has a garage and the soffit hasn't been painted or whatever. Those are really the only things we see that's different than a conventional type of for the appraisal. Yeah,
you nailed it. So yeah, VAs are actually one of my favorite loans to do. I'm very familiar with the process. I come from a military family myself. I have a lot of family members who have served. So it's one of my favorite products.
So why wouldn't someone, if they're eligible for a VA loan, why wouldn't they go VA?
Great question. I've actually had this come up before. So some people really want to put that down payment down just to keep the mortgage low. And if that's the case, if somebody wants to put as much as 20% down, it then normally makes sense to switch over from a VA to a conventional, especially if somebody's going to be charged a VA funding fee.
Okay, so is my understanding that PMI is that does a VA loan have PMI if it's less than 20%?
Good question. Yeah, thank you. I actually didn't bring that up earlier. There's actually no private mortgage insurance on a VA loan. Just 0% down, no private mortgage insurance. So like what you had mentioned, like when would it make sense to not do a VA and maybe go conventional would be if somebody was putting the 20% down, because 20% down conventional, there is no private mortgage insurance and there's no VA funding fee, obviously. So
and as far as interest rates, where are the interest rates compared to the other programs you have across the screen here? You have FHA, conventional, VA.
Yeah.
Where does the VA interest rate typically?
Usually falls in line with the other government programs such as FHA and the USDA, and they tend to run a touch lower than conventional. So we usually see them lower by 0.375, 0.5. Don't normally see them run lower by a whole percent, but they do tend to run slightly less.
Okay. So, I mean, the VA loan sounds like a great product.
Yeah.
I'm surprised we don't see more of them. Now, you, of all the loans, I think you said with FHA that like 85% of your loans are conventional, correct?
Yeah.
What about a percentage of VA?
So VA is probably going to be closer to about 5%, maybe a touch higher, just because either there's veterans are 1%, 2% of the population,
Right.
and then on top of that, not every veteran wants to use their VA loan, which is,
Right.
unfortunate. If it makes more sense, great, but if not, so it's a smaller percentage than I would see of FHA.
All right. Well,
Yeah.
thank you, Carissa. I think next week, let's get off the government programs, and maybe we'll just go right into a conventional loan.
Sounds great.
All right. Thank you, Carissa.
Thanks. Take care.
You too. Bye-bye.